Good morning, Chuck. How are you doing, my friend?
I am good. Good morning to you as well.
So I'll do a little bit of an introduction. Ladies and gentlemen, joined by none other, the man, the myth, the legends, Chuck Bradford of Dexari. So wherever you may be on planet Earth, we have an absolute legend of the game with us, former Binance Cabal, now a founder, building on Hyperliquid. Would you like to tell us a little bit about who you are and how you got here?
Yeah, it's quite the intro there. Appreciate it. Legend is something that's I don't consider myself, but if you want to consider me a legend, that's great to hear. I you know as DeFi Daddy here just mentioned, I'm one of the co-founders of Dexari, and I did previously work at Binance US before founding Dexari at the end of last year. I am a bit of a late entry into sort of like my career into crypto. I was previously sort of more in the TradFi or traditional business side of things before making the leap over to crypto and joining Binance. 4 or 5 years ago, I was working as a traditional consultant, but decided crypto is the life for me and jumped over here. Took the step into Binance US and then took the leap and founded Dexari, like I said, at the end of last year. I'm really excited to talk to you today and really get into the details of Hyperliquid, Dexari, anything you want to talk about. Really excited to be here.
So I guess the first question that I have is what was the blue pill moment for you? How did you get involved in crypto? What was your first purchase and why did you buy it?
Yeah, so unfortunately, I heard about crypto a lot earlier than I decided to buy anything. I think I first heard about Bitcoin back in like 2013, 2014, maybe even earlier than that. And the people that were telling me about it, I just like I wrote it off immediately as, video game money, which, I feel bad for myself for having done that because I would have loved to purchase back when it was that cheap. But uh, I got more information and started reading white papers and everything back in like 2017, 2018. Right around like the ICO boom era was when it cropped back up in my life. I was actually at business school at the time, and one of my classes we were learning about how ICOs work and how Ethereum works. And so my first purchase was of Ethereum back then, because it at the time made most sense to me. It's like there was like a bit of like a use case and tech narrative behind it. Didn't really get too deep into Bitcoin at the time, but you know, even though everything kind of blew up then, I did stick with it. I didn't sell any of my Ethereum, so I'm still a holder since then. And I've since then got deeper into other spaces like Bitcoin and a handful of others, and then most recently really getting deep into Hyperliquid, which is I think the most exciting thing going on in crypto right now. And yeah, I really just becoming a bigger and bigger believer of the foundation of crypto being in like ownership, self sovereignty, and all like the mission that the reason Bitcoin exists and the others have existed and grown since then.
Yeah, we're kind of seeing the transition from crypto as like a speculative vehicle, like you said, video game money, towards the emergence of a new economy.
Yeah, 100%. I think it has shifted so much even in the short period of time that I've been paying attention to crypto. It's, every year that goes by, it's like 10 years of, changing narratives happening in that span. So I'm really excited to see like, this getting more and more integrated into people's, daily lives. I think crypto belongs to be at the center of the new economy.
100%. And I think it's a very like what's the word? Projects like Hyperliquid or ones that are generating real revenue in quotation marks. I think they're kind of at the forefront of legitimizing the space because before it was like, "Oh, we're selling monkeys on the internet. They're on Ethereum. You can buy them for millions of dollars if you'd like to." And
Yeah.
now we're starting to see these real business cases present themselves like Hyperliquid or even Pump Fun. Like Pump
Yeah.
Fun from a business case perspective is amazing.
Yeah. Regardless of what you think of meme coins, and I know there's plenty of different opinions out there, you can't argue with the fact that they are making money. And It's been so funny to me in the last few months hearing this term like the revenue meta or the profitability meta. And it's just like, no, this is how a business works, and like making money is like part of the like the underlying value here, and it's not just about not fully about narratives anymore, which is great to see. And I think there's a long way to go still, but it's great to see that something like Hyperliquid, which is making so much revenue and actually has a lot of real users and use cases, is actually kind of emerging in this cycle at least as the big story, which is great to see.
Yeah, and I think that also kind of is attuned to the fact that it's catching eyes from traditional finance because the buyback revenue is so akin to stock buybacks. And it is very easy to apply that theory to the world of crypto. It's like, oh, Apple buys this amount of their stock every year. Hyperliquid, instead of a stock, it's a token, obviously. But that concept, I think, is very sticky as this market becomes more and more, let's call it traditionalized. Because I'm a firm believer that crypto is slowly turning into Wall Street 2.0. It's just like a new playground for them where they can engage in their, let's call it, deceptive tricks. And by and large, I think it's a great thing because numbers go up.
Yeah. No one is upset unless you're a bear, and in which case I don't really talk to you probably. Everyone's happy that things are going up. So it's the number go up technology is undefeated.
Yeah, the coins have been improving rapidly over the last like 48 hours.
Yeah. Yeah. Exactly.
So let's circle back. You said you worked in traditional finance. If I'm not mistaken, was it management consulting?
Yeah, so not like exactly finance, but a lot of finance involved in what I did and working with financial clients. I was at the Boston Consulting Group. So worked on a really diverse set of types of clients, nothing close to crypto, frankly. It was, hedge funds, pharma companies. The weirdest one was a cruise line. So just like kind of like everything under the sun, literally. I worked on a bit during my time as a consultant.
And I think a really popular like question that people in the community have is like, how do I get started in crypto? How do I start working in the industry? So how did you make that transition from Boston Consulting Group to actually working in crypto?
Yeah, I mean, the answer is, I think, really simple. It's just you have to go do it at least, like you have to start somewhere. So when I decided, like, crypto was an interesting enough topic to me that I was getting passionate enough about that I felt like was the next big wave of opportunity, both career wise and also just doing something that's interesting to me. I decided I wanted to jump into crypto. And it's really intimidating to think like, okay, going from something completely different into crypto and saying like, how do I get started? Uh, and it just takes some work, and you have to see, okay, what companies are out there that could be possible, or even if it's not a company, is there something I could do on my own? But I'd recommend if you're just getting started, it's probably easiest to jump into a company that exists, established to an extent, and just learn a lot. And that's what I did. I looked at 10, 20, 30 companies. I don't even remember at this point. And I ended up deciding to go to Binance US because obviously it's a big brand name, but also it was a place where I could learn a lot really quickly. Now I've there are different opinions of centralized exchanges now versus then, but when I jumped in there, I was able to learn a lot really quickly. And without having done that, one, I wouldn't have met Mike, so the founder of Dexari, so that would have been a bummer. But without that, I also wouldn't have had the opportunity to basically spend my full work week learning more and more about crypto and how everything works behind the scenes. Because without that, I wouldn't have had the context to do everything we're doing at Dexari. Oh, sorry, am I out?
It cut out briefly.
Oh, I got a phone call. I forgot to put myself on do not disturb. But you have to start somewhere, and I think it's intimidating, but you just got to go for it and start with something. Start with something that can allow you to learn, even if it's not what you want to do long term. Like for me, Binance US, I didn't plan on doing it forever, but it was a great place to learn.
Right. And so in terms of like your scope of work at Binance, like what was your title? What did you do? And like I guess I don't want to say like the three things that you learned while working at Binance US, but obviously it shaped where you are now.
Yeah, so I joined. My title was comically vague. It was strategy and improvement was what my title was, and it's just reflects my prior experience as a consultant. They just wanted someone to come in and like look around and fix things. Um, and so I worked pretty closely with the CEO and COO of Binance US and kind of like did that. My title ended up turning into director of growth and then senior director of growth and ventures. So kind of just like through that got to work on lots of growth products and looking into venture opportunities and that type of thing. And I think as far as what I learned, I think I immediately was surprised by how these centralized exchanges work in the background. I'm not even talking about like what you might assume I'm talking about here. I'm saying like before going there, I very naively thought that when you're trading on an exchange, that you are actually using the blockchain technology and trading with somebody on the other side. That there's blockchain movements that are happening there, and this is just based on like I've been reading white papers and understanding the technology. Like I understood how like why blockchain exists and how these transactions should work. But then I get to Binance US and very quickly realize, oh, centralized exchanges aren't actually using blockchain technology under the hood very much. They're using it when you deposit, obviously, onto a crypto wallet. That's a real on-chain transaction. But then ultimately everything gets routed into the centralized wallets where effectively these centralized exchanges are banks holding a ton of crypto for you. And then when you trade with somebody, it's actually just them changing the entries on the internal databases. And so it became baffling to me that there was all of this great tech in the blockchain space and being built up, but none of it's really being used by the most successful companies in the space, like Binance and Coinbase. At the time, FTX2 was a big deal.
May it rest in peace.
I don't know about peace, but may it rest. And so like the most successful companies in the space weren't even really using the technology that they were helping onboard users to, which was a weird dichotomy. Like to me, like I didn't understand how that could be the case, and very firmly believed like this is a temporary model of things. It only is like this because the technology on chain is not fast enough. It's not easy to use enough. It's all the things that have been issues in the past, which are largely resolved at this point, honestly. And so like this isn't like the top three things I learned at Binance US, but all of it was on that theme of like this isn't how crypto is meant to work in the long term. Even if it's how it has to work now, people shouldn't be experiencing crypto from a custodial platform in the long term, in my opinion.
Yeah, I think I've seen this as a meme on Twitter where it's like centralized exchanges are just reskinned AWS.
Yeah, I mean it's yeah, I mean I wouldn't necessarily go that far, but like it's essentially yeah, it's
I mean, it's just a huge database, right? Like you said, they're just changing queries. It's like,
yeah.
oh, user deposited this. Okay, that's the blockchain component. Everything else is just some kind of centralized database where you're just changing inputs in the ledger.
Yeah. And like if you're, for instance, using a feature like staking or DeFi on any of these platforms, what you're doing is just like saying, hey, Coinbase or hey, Binance, like go stake this on my behalf. And it's usually not even really one to one. It's just like kind of some sort of like aggregated interaction with the blockchain if it's happening. So it's really, it's not your keys, not your crypto, and that's really what it is. And there are certainly maybe some benefits to some people like that, like they feel more comfortable and familiar with like the bank model, but what you're paying for there is literally fees, but also control. It's the fees Coinbase and Binance and the others charge are really, really high, and a lot of the times you can't even see what you're being charged, like because there's hidden fees that they can abstract away pretty easily. And secondly, you could get locked out of your account even if you don't do anything wrong necessarily. It's just like you could hit a bug and then they just take forever to get back to you. I've been in a queue on Coinbase for customer service for a month at a certain point. It's just like it's not the best experience, whereas that none of that can happen from self custody.
Yeah, it's very anti-theoretical to the world of crypto that I think Satoshi envisioned, right? These centralized exchanges, they hold so much power, not only in terms of the equity on their balance sheet, but in terms of the customer rights. Because like you said, Coinbase can lock you out of your account and customer support doesn't help you for days, weeks, even months. And it's super common. Or like you accidentally have a VPN on when you go connect to your exchange and now they want to permanently close your account.
Yeah,
Like
no, 100%.
there's just so much systemic risk to these centralized exchanges that is passed on to the customer in the name of compliance, that the market is actively searching for a new solution, because it's just the current dogma of buy your crypto stored on Coinbase isn't really a long-term solution.
No, no, I fully agree with that. And that even like there's also so many other things like, if you for a while there was like a pattern of if you hold a certain token, you can get airdropped another token, or there might be forks of tokens. And the entire time that those are happening, like it's fully up to the centralized exchanges which ones they distribute to you versus which ones they keep for themselves. And it's like fully under their control, and you don't have any control over that at all. Um, and I think it's just and another weird thing about this is I think if a centralized exchange, like if those companies were to start today instead of when they did, they probably actually wouldn't have even choose to build it the way that they did, because the way that it's built for them is like a really terribly overhead heavy, back office heavy business model. It costs so much money to make sure that those massive databases are secure, and rightfully so. They should be spending tons of money to make sure that they can't get hacked, or that there's not a single honeypot anywhere, because that can be a massive issue. And there was a Bybit hack only a few months ago that is illustrative of that. But I mean, that was a small version of the issue. Like it could be much bigger if like the massive walls were hacked. And so Coinbase, Binance, and others spend so much money and so much tech effort on securing something that if they just simplified it and made it from self custody, the issue goes away entirely. Which is, I mean, this is leading into why Dexari makes sense, but it's like it's just way more cost efficient if you run a self custodial wallet versus a centralized exchange.
Yeah, I feel like the original design, like you said, that they founded in the early years of crypto may not have been the best route to take if it was recreated in this day and age. And like you said, the Bybit hack is a glaring example, because if I'm not mistaken, that is the largest hack that's ever taken place in crypto, and it actually increased North Korean GDP by 5%.
Yeah, it's bad in so many ways. It's just like it's bad for Bybit. Obviously, they lost money. It's bad for the customers, even though I think they were made whole in the end. And it's bad for the world. Like if there's more money in the hands of that regime over there. So um, and yeah, it's baffling how big of a hack it was. And like you said, I think it was the biggest by dollar value, but uh, it's not like the worst case scenario, honestly, because it was, I think, one of their smaller wallets, or one of the smaller wallets on one of the smaller exchanges. Some of the wallets that exist in some of these centralized exchanges could be much bigger. And if you go back far enough to like when Mount Gox happened, uh, like even though the dollar values might have been smaller in what might have been compromised, the percent of the exchange, which was an issue, was higher. So it's a huge issue, and it's like something that is crazy hard to manage. And I don't envy people being at a centralized exchange having to do that. And one of the reasons I left is because I just saw this glaring issue.
It's also a systemic problem. As the exchange grows, it becomes a more and more issue because they have more equity to secure. It's kind of like hiring security guards for a bank vault. The more
Yeah,
money in the vault, the more security guards you're going to want.
yeah, and also the more people are going to try to get access to it. Like it's the bigger the honeypot grows, the bigger the bear is that's coming after you.
Exactly. And I mean, we even saw this, I want to say it was like 2021, 2022 era, when bridges were getting hacked left and right, because it was a centralized model of a bridge where it was a smart contract that just held everyone's tokens. And it was like, okay, I deposit on one side, I withdraw on the other. But when they hack the smart contract, it's all theirs. Like, with the example that comes to mind is the Ronin bridge for Axie
Yep.
Infinity. I want to say that was like a $2 billion hack, maybe more. Um, and so it's interesting because in the world of crypto, like, it's very different, where data is money. In the Web 2 world, data is data, but in the Web 3 world, data has a tangible dollar value because it's an asset. And so it's very interesting about how we can solve that problem as an industry going forward. And the most obvious answer is nudge people towards self custody. And that's part of the reason why I think Hyperliquid and the technology built on top of it is so captivating, because it's an opportunity to transact on your own accord and not have to worry about those systemic cybersecurity threats.
100%. I couldn't agree more with that. It's just it makes so much more sense, but it only makes more sense if we can make it easy for people to figure out, because it's unrealistic to expect that the average everyday user is going to write down a seed phrase and remember it and be comfortable saying, okay, if I lose this, then I lose all of my money, because it's not just data, as you said, it's money, it's people's livelihoods eventually if the economy fully moves on chain. And we're not in a situation like with Web 2 where it's move fast, break things is okay, because yeah, like data leaking is awful. That's not something anyone wants, but at least it's not people's livelihood. And moving fast and breaking things in crypto is not as acceptable as it can be in other contexts, given that it is money. So you know that's why I think, as I've alluded to some of like the advances in technology that have happened in the years since I first entered crypto, and one of them is this easing the creation of a self-custodial wallet. So at Dexari, we use Turnkey, which I think is one of the best ones out there, which you can tie your holdings with a email address or an Apple account or a Google account, and as long as you have access to that account, you have access to your wallet, and you don't have to worry about, oh, I forgot this string of characters and now I don't have access to any of my money anymore. It's as long as you can access your email, which we're now relying on like Google level security or Apple level security, which is pretty good.
That's the thing. It's kind of abstracting the complexities of account registration away. Because, I mean, I myself, me and my brother, we mined Bitcoin in my parents' basement. We got almost up to 400, and then we lost the keys on the private computer. We tried to move
That's
fast and break things, but then the computer got thrown out 2 years after, and I didn't want to search the landfill head to toe. But that idea of account abstraction, I think, is really important for onboarding the next, let's say, billion users, right? Because mom, dad, grandpa, even your little cousin, maybe you don't like, they just shouldn't have to be trusted with a private key. But if you can abstract it using Privy or Turnkey and have that pass key on your iPhone that when you look at it, it signs you in, I think that's actually a key onboarding experience that a lot of people don't actually appreciate for getting the next billion users in crypto.
Yeah, 100%. And so sorry to hear about your 400 Bitcoin. I didn't know that about you. That's a devastating loss to have experienced.
Yeah, it was my donation to the Bitcoin community.
Yeah, you've deflated the asset a bit for all of us. We all appreciate it.
Yeah, so now we can confidently say it's 21 million Bitcoin minus Satoshis minus DeFi daddies.
Yes, exactly.
Switching gear a bit here. So obviously, you're building something. It's built on Hyperliquid. Let's focus on Hyperliquid first. They call themselves the House of Finance. Why do you think this product is so viral in terms of its product market fit, in terms of its user retention? What is it doing differently that other projects aren't? Because we've seen decentralized perpetuals before, like DYDX or Gains Network or GMX, but they haven't caught the same level of traction that Hyperliquid has. What is
Yeah.
Hyperliquid doing that previous projects aren't?
Yeah, I think the biggest thing is probably how like end user product focused they've been from the start. So I mean, these other examples that you mentioned also did have a way for users to interact with it, but Hyperliquid focused so much on making the product very good. And yes, they were building out the blockchain underneath it alongside, but they were focused on catering the blockchain specifically to the product and making the product perfect for the target user, which it sounds crazy, but it's not the most common path in crypto to be user centric from the start. And Hyperliquid did that amazingly. And there's a reason why some of these like crazy high volume traders are doing tens of millions of dollars a month or more, or billions of dollars in a trade, are doing it on Hyperliquid. And it's because the product is really great. And it is, I'm not like a power user of those other platforms. I was not a power user of those, but from what I understand, the performance on those was never quite as good as what you could get on a centralized exchange. The speed, the liquidity, the performance, the just the lack of lagginess on it was just so much different, as I understand it, on Hyperliquid from those other ones. And so I think if you don't have a product that is actually keeping users on beyond the incentives programs that you might put in place, then you don't have a product that can survive. And I think that's probably part of the reason why these others didn't do as well. Is like once you're past the incentives, once you're past the token, once you're past the shiny new object phase, how do you actually maintain people? Now, Hyperliquid still has a way to go to maintain its momentum that it's built up, but I have no reason to believe that they won't. They've continued to show that they are incredibly innovative and hardworking as a team, especially with as small of a team they have. They've done so much in such a short period of time.
Do you know
It
how
would have
many
been
people are on the team?
I believe it's 11. Is what I've heard.
That is insane.
Yeah, and I mean I don't have any way to necessarily verify that. They keep everything pretty close to the
Yeah.
chest, but still it's crazy. And I think they would have been a massive success story even if they stopped at Hypercore, like the core, perps trading engine. But since they launched that first product, they've layered on spot markets, which is a potentially huge opportunity. They've launched the Hyper EVM. They had their token generation event. They are launching these HIP improvements and HIP3, which will enable others to list perps on their infrastructure, is coming out. And all of these things are just really, really innovative and show like each one, they're getting closer and closer to this housing all finance vision. And they aren't showing any signs of stopping. And beyond that, they also haven't shown any signs of interest in like cutting and just being like, okay, I've made my $1 billion. I want to go now retire. They all seem to like just really be driven by this mission, which I think is really admirable. It's I think it's a lot easier said than done to have potentially hundreds of millions or billions of dollars that you could just go off with and not do that, which is pretty. It says a lot about them.
Because it's kind of the crypto founder prototypical approach. You have an idea, you raise money, you bring it to market, whether it's a protocol or a sovereign layer one, and then you just collect vesting for the rest of your life and nothing really happens with it, right? And I think we saw that a lot in 2021 and we're seeing it now. Like, why do we need all these layer ones? And the answer is because it's super profitable for the founders to host nodes or collect their vesting and then they can go do other stuff. Versus the Hyperliquid team is just constantly innovating, right? So like spot trading, I think is very innovative, but a specific component of spot trading is what I want to focus on here. If I'm not mistaken, it's a unit that actually facilitates the bridging in and out. And so Hyperliquid, team of 11, they're focusing on building what they want to build. They want to build the core products. But what I think is really fascinating about it is they're more or less kind of outsourcing the ecosystem to whoever wants to build it because they recognize they can only build so much at such a high quality before things get degraded through dilution, right? So if they were building the bridging ecosystem and a mobile app and they were working on external perp pricing and some kind of oracle, like it's way too much to build. But they're like, we know what we want to build. We're going to do a kick-ass job and you guys do the rest. And I think that idea of encouraging your ecosystem to build alongside of you is part of the reason why Hyperliquid's been so successful.
Yeah, I couldn't agree more. It's they built out this like initial product, which is this like, perps UI, and you can go in, you can trade it, and really that ignited everything. That got it all started. But as you said, they've since started like, making it more decentralized in terms of how this is building out. It's honestly not that dissimilar from how I imagine like the early days of Bitcoin, where it's like most of the development early on was done by Satoshi or the small group of people, and then now it's managed by Bitcoin Core, which is a much bigger group of people that are doing things in a decentralized manner. And in this case, it's a lot of teams doing things in a decentralized manner. So Unit is obviously one that you mentioned that is bringing a lot of the big spot listings to Hypercore. So like Bitcoin and Ethereum, Solana, all of the big ones that they've brought on. which yeah, the Hypercore team or Hyperliquid core team could have done that, but why do that if you can just like focus on the underlying protocol itself? And then with HIP-3, it's another evidence or point of evidence that they are interested in decentralizing this more and more over time. Because they could also say, hey, we're just going to continue being the one that is exclusively able to list perps markets. And they can make a ton of money doing that, but instead of growing an entire team to do the perps listings, they've outsourced it to whoever wants to and whoever has the sort of the stake to be able to do that. And that'll mean a couple things. It'll mean way more listings can happen more quickly because you're opening it up to a world of people rather than building out a team yourself. But it also means it's really continuing to decentralize Hyperliquid over time because you could argue that in the early days it was more centralized, but then they keep on adding these features that make it more and more decentralized over time, more and more permissionless in nature. And it's really important, both for the ethos of crypto, but also just so that the ecosystem grows out as well as it can.
Yeah, I've been discussing Hyperliquid Improvement Proposal 3 quite a bit on stream because I think it's a major catalyst, not only for Hyperliquid price, but also just for validity of the product itself. Because as soon as that proposal goes live, and again, like you said, the team keeps their cards close to their chest. They're very hard to read. Nobody knows. And they've the TGE was basically a surprise. HIP2 was basically a surprise. Like they like to come out guns blazing with these announcements. When HIP3 goes live, I think it's not only obviously going to help price, but it really helps solidify the vision of the House of Finance because there are so many innovative products waiting for HIP3 to come out. And as soon as traditional finance bros or crypto investors are like, yo, I can trade the NASDAQ on Hyperliquid. I can trade volatility indices on Hyperliquid. I can trade private market companies like OpenAI or Anthropic on Hyperliquid. I think it's going to be such a light bulb moment because most people don't really understand something until they see it. It's a grandiose, abstract idea. But when they actually see it in real life, the light bulb moment turns on. And it's like, oh, shit, like this is real.
Yeah, I couldn't be more excited for HIP-3 to come out. I think, crypto in general and even Hyperliquid specifically can be feel like a bubble at times where not like a bubble growing that's about to pop, but more like a closed ecosystem where it's just an echo chamber. But with HIP-3, there will be an enormous wave of real world assets from outside of crypto that now are part of crypto, and it'll happen really quickly, I think. And at Dexari, we're focused on oh, how do we bring in the current Hyperliquid traders who want to trade on mobile into Dexari, and that's a great target for now. But as HIP-3 launches and all of these people that haven't even touched crypto see that it's just a better place to trade the assets that they want to trade, whether it be stocks or indices or volatility or commodities or really anything else out there, they're going to come and trade on the best place where it's available. And it's just opens the target audience for what Hyperliquid is so immensely that I think everyone keeps on saying, oh, people are underestimating the impact of HIP-3. I think people are underestimating how much people are underestimating the impact of HIP-3. So I think I'm really excited to see how it goes. Obviously things could go differently than I'm expecting, but I have no shortage of excitement here.
Are there any specific products, projects, or I guess asset markets that you're particularly excited for with HIP-3?
Yeah, I mean, I think the ones that'll probably do best early on, I'm assuming, are still going to be in some way related to crypto because there still is going to be some barrier or some ramp up and education barrier to get people that are fully outside of crypto to come on. But I think it's actually a team you might have introduced us to, the Volmex team.
Yeah,
They have a big Bitcoin volatility index, and I think that's a really cool product because there's plenty of traders in crypto that want an easier way to trade just like the volatility versus needing to manually do that themselves by placing several different trades to essentially create the same thing. And I think that product will be one that a lot of people will be able to use, whether it's hedging or because they just believe in the volatility. I think that type of product is going to do well really early on, in my opinion.
Yeah, Cole's actually going to come on the stream next week.
Oh, nice.
Yeah. The viewers are just going to get slammed with Hyperliquid sessions.
Yeah, love to see it.
So I guess switching gears a bit, you're co-founder CEO of Dexari. Will Dexari support HIP-3 basically from day one, or like what does that actually look like from the tech infrastructure side?
Yeah, I need to. There's a couple of details we still need to hash out on our side with this because it's going to work a little bit differently than our listings work today. Whereas now, if a market is listed on Hyperliquid, it just automatically flows through and it's on Dexari. We don't actually have to do anything. It just happens automatically. The only thing we actually have to do is we have to upload the image. So if you trade an asset on or a market on like the first hour, you might be trading with just like a letter in place of the logo. But other than that, it's like pretty automatic, just because we're passing through Hyperliquid markets. With HIP-3, I believe we have to pick and choose because they're not automatically listed on Hyperliquid in the same way. But tech wise, I think it's relatively straightforward. I'm not the tech guy myself, so I don't fully understand. Maybe I'm simplifying something that my CTO is gonna have to figure out more and more depth, but it's gonna be something we're able to enable pretty quickly. And we'll just have to make sure we're in touch with all the teams that are doing it because I think it does require some amount of work for each listing.
Right. Okay. Because I found out that Yeezy was available for trading on Hyperliquid through Dexari. I got the push notification.
Yeah.
Same thing with Pump, and like at the end of the day, like Hyperliquid has been the first mover on all of these new coins that are coming out. They're pricing stuff pre-market, and I mean, I myself found out through a Dexari push notification. I love those because I mean, honestly, by and large, most of the time it's a free short to zero.
Yeah, it's I've noticed that myself too. Like I used to learn about listings on Hyperliquid first through the I think the Telegram announcement channel I have on alerts, and whenever I see a new listing, it pops up there. But I've noticed since we added that a few months ago, the push notification in Dexari for new listings, those push notifications actually come even before the Hyperliquid announcement because I think it like gets listed and then the team posts on Telegram. But as soon as it gets listed, it's like seconds later that the notification comes up in Dexari. So it's definitely a popular feature that we've added.
I agree. About Dexari. So recently launched on the Google Play Store and the iOS Apple Store. What's next on the roadmap? What have you done so far? What are you most excited about in the future?
Yeah, so what we've done so far is we've added perps and slot trading. That's the primary feature within the app, and that's been there since day one, and that's been what we've been focused on building. But to go alongside that, we also wanted to make it a way easier to get assets into Hyperliquid. If you've used Hyperliquid in the past, you may have run into pain points in making sure you got USDC into Arbitrum before transferring in. It has been in the past a bit of a pain. But they're adding more bridging pathways in, so it is getting better. But one thing we wanted to do was make it so if you have USDC on any chain that you could transfer it in. So right now we support Arbitrum, Ethereum, Optimism, Base, BNB Chain, Polygon, and as of earlier this week, HyperEVM also. And so you can deposit on any of those chains and use it like you would in the other wallet. And then you can transfer really easily across chains into Hyperliquid to trade. So we wanted to make it easier to on-ramp your assets into Hyperliquid and then get started trading immediately. Part of that also is we've integrated with MoonPay. So you can buy with USD. You can buy USDC and then transfer into Hyperliquid. We have noticed so far, primarily a lot of our users already have a lot of their wealth on chain, and so people typically have the USDC already. But if you don't, you can use MoonPay to get it on. So that's what we have so far. Actually, one other thing we have that was launched with the launch of HyperEVM is we have Wallet Connect in our app, which means you can, on any of those chains I mentioned earlier, you can go to a DApp, whether it's DeFi or staking or NFTs or whatever you want to do, and you can scan in from the Dexari app onto those apps and use your assets on the Dexari wallet. So it's now a general purpose wallet plus a trading wallet. That's what we have today. Long term, and I guess in the near term, we're planning on adding more embedded features into the wallet. So when I say an embedded feature, I mean, if you go to another wallet like a MetaMask or a Phantom, there's that like swap button that's in the UI. And behind the scenes, well, really all that's doing is accessing Uniswap or one of the other AMMs and swapping your assets for you. But it makes it really easy to do. And what we're going to do is do the same thing for really everything on chain. So there'll be a embedded app for staking. There'll be an embedded app for stablecoiner, and there'll be an embedded app for you name it. Any feature that you want to do on chain, we want to have it built into the app such that it feels more like to you as the user that you're using a centralized exchange app where all the functionality is just built in, rather than it feeling like a wallet where you have to go to the dApp browser, you have to find the dApp you want and then go to it. We just want it to be really smooth and really easy and embedded within the app for you.
And kind of offer everything people could do in the ecosystem. Oh, I got an inactivity warning on the live. One sec, I just gotta do a quick little capture. We're good. Basically offer everything that could happen in the ecosystem all in one place. And just to explain how that normally works in a centralized exchange context, right? When Coinbase or Binance offers you, hey man, like you can stake your USDC for 4%, it's because they're making 7-8%, whatever it is. They take about maybe 50% or more of the yield, and they're like, okay, we took the dollar, here's your cents. And so offering these kind of products through directly from the consumer to these decentralized applications is not only a lot more, I guess, it aligns the incentives, I guess is the right way to say it, right? Because it brings users to useful dApps, the dApps benefit, the users get whatever service, whether it's yield or copy trading or whatever the protocol is that offers it.
Yeah, and it's exactly right. And having been at a centralized exchange, I saw firsthand like how much you end up losing if you do it that way versus using it your wallet directly. And really, from our standpoint, we benefit so much when our users are making more money on our platform, because that means more trading volume. It means a lot of other things. So we actually want you as a user to be earning the best yields possible. We want you to get the most out of your money such that you want to stay with us and you want to trade on Dexari, because it's just best for all of us. And our incentives are completely aligned, as DeFi Daddy said.
Let's talk about something that I don't think the community really understands. We briefly touched on it about how Hyperliquid kind of empowers its ecosystem to build on top of the technology. It's an innovative product called Builder Codes. Do you want to give us like a quick little rundown on what Builder Codes are and why they're important?
Yeah, so Builder Codes are what allows, without Builder Codes, we wouldn't necessarily have been able to build Dexari the way we wanted to. I think how the easiest way to explain it is, when you are placing a trade on Dexari, we are tagged as the builder involved in the transaction, and as a result, we're able to add a small fee on top of what the trade costs on Hyperliquid. And so on Dexari, it's very low. It's, I think, 0.01% if you're on our highest tier, and it goes up a little bit, I think, to 0.05%. So it's a very low fee, but it allows us to fund our operations without needing to do a BD deal or sign a contract with anyone that allows us to negotiate. All right, we're paying you this much for this flow, and like you're going to give us this rebate back, which is how it would work in normal circumstances. Where if Hyperliquid was a traditional vendor, we would have to figure out some contract situation to get legal teams involved, and there'd be so much overhead in the deal, and all of those costs are passed on to you as the user. But instead, Hyperliquid just said, hey, we're going to put this thing out there, let builders access all the liquidity for the users, have the users be able to interact with it directly, allow the builders to charge what they decide they want to charge on this, and we're just going to step back. We're just going to create this level playing field and let all you guys decide how to use it. And it cannot be overstated or understated. I always get that mixed up. How important that is, because it removed a huge chunk of BD work and legal work up front, and we were able to just kind of launch immediately. All we had to do was write some code, and we're able to monetize our product immediately. And that is incredibly unique. And I think is the reason you've seen so many applications and use cases spin up out of Hyperliquid. And it's just really a perfect example of what we talked about earlier, where it's, Hyperliquid just creating the ecosystem where great projects can build.
Yeah, I mean, they created the infrastructure for their community to infinitely scale their core product, which is so innovative because it means, like, for example, like the word front end is often tossed around quite a bit in the Hyperliquid ecosystem because it's like, well, Hyperliquid's the back end, but now we're creating these front ends, right? Because there is a lot of front ends,
Yeah,
specifically in the web interface model. And so it's
yeah,
really it's awesome that they built that infrastructure because more or less they've built a permissionless system for users to create a venture without needing that legal upfront work, without needing an entire BD team to pencil the deal. And so I don't want to say they've future proofed their business, but they've done a pretty good damn job at
yeah.
future proofing their business.
They've done it as much as you can future proof it. And, you know, they really only were able to do this because they got such a great user base built up from having a great product to begin with that they didn't need to, because in most situations they might need to go to a front end and say like, hey, will you please integrate with us because we want to make sure we get a front end building on top of us. It was actually the reverse because there's so much demand to serve as the front end of Hyperliquid when they launch builder codes that you can look at, like, there's so many teams like us that are going and using this builder code infrastructure because we want to access Hyperliquid. It is such a good product for us to use. And another benefit of this, beyond just like saving all that BD and legal work, is that it means that all the fees that you are charged as a user are fully transparent on chain. Like you can go look on, FlowScan or HyperTracker. There's a handful of other explorers. You can actually see what Dexari is charging you. You can see what the others are charging you. It's all out there. It's it's impossible to hide our fees, and that's a good thing for everybody. It holds us accountable, and it makes it so you can make an informed decision as a customer.
Yeah, I love checking FlowScan because you can see people's individual builder codes. You can see how much volume they're doing, what their revenue is. For those who don't know, Dexari, after the first month of launching on the iOS store, did cross the $1 billion total volume. Congratulations to the team.
Yeah, yeah, thank you. And I love how publicly out there it is because it's like, yeah, we could make this claim if we were operating a different business model. We could say, oh, we have $1 billion of volume, and people could like believe it or not. But because all the data is just out there, you can go verify it for yourself. I mean, it's a blessing and a curse. Like everyone can see what we're doing, and so the competitors have the access to the same data. But I prefer it this way. It makes it just a better, more transparent world for us.
Exactly. It's the core epitome of building in public.
Exactly.
Switching gears a bit, Hyperliquid had their first TGE. It was a bit of a surprise. They airdropped to the most popular users. There's going to be another airdrop in the future. There's a lot of speculation about how to kind of like optimize your positioning for it based on your expert insight in Hyperliquid. How, like, what do you think the community should be doing if they want to get more involved with what Hyperliquid is building in light of a future airdrop?
Yeah, I mean, I think I don't have any inside knowledge at all about what Hyperliquid is thinking in terms of a future airdrop. I'm as in the dark as everybody because, as we keep saying, they keep things pretty close to the chest, and they do it very well, so that there isn't like a lot of insider knowledge, which is another admirable quality of theirs. Uh, but based on what I know about Hyperliquid, they seem to really be focused on rewarding like real users and real use cases. So I think it's going to be mainly about, use Hyperliquid like yourself, like a real user. Like, do Hyperliquid does things, I think, the right way, and so it's hard to like gamify it too much, I think.
Yeah, because I think there's the huge meta around like min-maxing airdrops, and people know how much Hyperliquid Season 1 airdrop was worth. Like, I think the smallest airdrop at this point is 7 figures.
Yeah,
And so
it's pretty crazy.
obviously everyone's going to want a piece of the pie in the future. And so kind of just like high level what I've been telling people, trading volume, use the app, trade on leverage, whatever you can afford to lose. Obviously don't bet the farm. From then until now, like you said, they've come out with Hyper EVM. They've come out with Hyper EVM. You said they just want people to genuinely use the product.
Yeah, 100%. I think that's best for everyone. It's also like the airdrop's worth more to you if hype maintains its value. So that you also don't want them doing things that are just like devaluing the platform. So I think it's good for everybody. I think the way they've been doing things is the right way.
Yeah, and like even before you hopped on stream, I had the hype chart pulled up. I did a hype BTC, a hype ETH, and then I pulled up the DeFi Llama, and they made their annualized revenue is $1.26 billion with a B, and 97% of that goes back to token buybacks. They have the best decentralized perps platform. Their ecosystem is growing, and so I guess trying to be a contrarian might be hard as a builder in the space. But what do you see as Hyperliquid's potential pain points? Because I have some ideas, but I'm curious what you see as their potential downfalls.
So yeah, for the record, I don't think that there is a downfall coming, but I think some of the things that I know that they're working on, and I'm confident they'll figure out, is uh, like just continuing to decentralize things, because they continue to expand on the validator set, which is a big part of their they launched staking such that you can like see how many nodes there are that are validating, and they'll need to continue expanding that to be sort of credibly decentralized. I have every reason to believe that they will, but that's something that there's still work to be done.
That is a pretty
Uh,
common piece of criticism from the community, specifically around like the Jelly Jelly incident where there was like mispricing of assets. They had to protect the vault. That was some criticism from the community, but like you said, expanding the validator set is an easy way to go around that.
yeah, and it's impossible, I think, for there to be zero pain points along the way like that. Like even Ethereum in the early days had the DAO hack that they had to reverse. I think
Or
I
the
think there was
D
also
other side mint shut the chain down for I think it was 12 minutes.
yeah. So it's like I don't think anyone really would say at this point that Ethereum is very centralized, because it's like it's grown so much and it's very decentralized. And I expect similar things to happen in the Hyperliquid, where decentralization just continues to increase over time.
Wait, quick side note. Did you know that 35% of Ethereum nodes are hosted on an AWS server in West Virginia?
I don't know if I knew that statistic. That is alarming. But so maybe what I said is not accurate. But, well, in that case, so maybe they still have some ways to go.
No, it's the mirage of decentralization in crypto. I think people don't. I think decentralization is really easy to believe in, but I think it's really hard to do in practice.
Yeah, I mean, foundationally, if you go down the layer below blockchain to the internet, we can only really be as decentralized as the internet is, which is not that decentralized in some ways, as you pointed out. And I think, yeah, I think the other thing that, I mean, there's another like volatility incident on Hyperliquid with XPL yesterday, and I think with a platform like Hyperliquid that's as new as it is, there's and like as big of a source of like funds as it is, there are gonna be people that are trying to find ways to like gamify it and exploit it, and so it won't be the last time that that happens to Hyperliquid. But assuming that the team reacts to it in the ways that they have in the past, and that it becomes a point where they don't need to react to things because they've kind of accounted for all the edge cases, I'm confident that those types of incidents will go away to a large extent. But something like what happened yesterday is not something that I would hope would happen, years from now, with an asset, even if it's got low liquidity.
Yeah, like you said, it's kind of those edge cases that may have not been accounted for in their current risk framework, because these decentralized perpetual futures are such a complicated product, A, to offer, B, to secure, and C, to manage that like HLP vault. Like there's so many different vectors for nefarious actors to try and leverage that we're like when these edge cases pop up, all they can do is react and improve and hope to build, I don't know if you like Nicholas Nassim Taleb, but a more like anti-fragile product, right?
Yeah,
Because at the end of the day, like they're building a product to such a user base that hasn't been done before, that there is going to be these vectors, and it's not about how they necessarily respond, it's how they improve and make sure it never happens again.
yeah, exactly. And it is, you will be hard pressed to find a product that has ever existed where there hasn't been an edge case that's unaccounted for. Like even the product geniuses at Apple launch products that have bugs in it, and like, I
Like
mean, even a couple
there was the
days.
iOS bug like
Yeah,
a week
exactly.
ago where
It's
people were getting drained through Telegram.
exactly. So it's like even a very mature company is going to have issues like that, and one that's as revered in terms of product development as Apple, like having issues is indicative of that. So uh, I think it's unrealistic to expect that 100% of edge cases are taken care of. You hope that they prevent anything from happening a second time, and that they prevent these types of things happening as proactively as they can. But bugs exist. You just have to do your best to risk manage.
Here's a question. I got two more questions before we wrap this up. Okay. We
Yep.
talked about the Jelly Jelly incident. Um, there was some fingers being pointed about centralized exchange cabals, specifically in that incident. I think it was those wallets were connected to both BitGet and Binance. And so I'm curious because obviously Hyperliquid is absorbing market share for both spot and perpetual trading at a very, very fast rate. And so my question is, based on your expertise previously working at a centralized exchange, do you think there's a chance that there was some kind of orchestrated attack to take down a competitor? Do you believe that conspiracy? And do you
Yeah.
think that I mean, obviously the trend of Hyperliquid absorbing market share is going to continue, but do you think that the centralized exchanges would stoop to try and take them out?
It is certainly not out of the question, which is like the whole problem here. The fact that this is something that we could debate whether it's realistic or not is a problem enough, because we've seen so many shady things happen with central exchange in the past. It's like you always have to be suspicious when something like that happens. And with everything being visible when things happen on chain, you can see like the outcome, but you can't kind of see the lead up to what happened there. So um, I don't know for sure what did or didn't happen, of course, because I'm not part of those conversations, but it's certainly possible. And the circumstantial evidence points to some amount of coordination, but you can't guarantee that it was coordinated versus individual actors seeing an opportunity at the same time. But you know, I wouldn't put it past them to say, to summarize there.
Yeah, right. Because it's a competitive marketplace, and at the end of the day, like perps are the bread and butter for centralized exchanges. That's what keeps the lights on and keeps the security at the door, so to speak. My last question, just kind of resounding something that my community has asked. Obviously, Dexari had their preseason wrap up. Points have been allocated. And some people are asking when Dexari TGE, when Dexari coin. I did see that there's been a ticker purchased, and I'll pass it off to you, Chuck.
I'd love to share details, but we don't actually have any details about anything regarding a token or anything at this point. So the points program is out there, and I'd love for you guys to try to earn as many points as possible, but nothing to share on a token.
Nothing to share on the token. He keeps his cards close to his chest in true Hyperliquid fashion. Is there anything else that you want to talk to the community about regarding Hyperliquid, Dexari, market at large?
I think the last thing is just, you know, we built the product we have at Dexari because of our users and the feedback we've gotten. So my big ask here is, go try out Dexari if you haven't, and if you have, send us your feedback. We do listen when you provide that, because we need this product to be useful to you for us to have success, and we want it to be useful to you. So let us know what you think. We're pretty responsive on Discord or Telegram, wherever you contact us. So yeah, keep the feedback coming.
Perfect. Thank you so much, Chuck. I appreciate your time. Hope you have a rest of your wonderful Wednesday, and I'll talk to you later.
All right, thanks a lot for having me.
There we go, guys. That was the interview with Chuck. He's a good guy, right? He's smart. I told you guys he was smart. That man, I love him. So I'll pull up the Dexari Twitter, dexari.com. This is the app that he is the co-founder and CEO of, dexari.com. I'll type it in the chat. Recommend following it. They've got a great product, a fantastic team. I golf with some people on the team. They're good friends of mine. And I want to give them as much support and FaceTime as they deserve, because what they are building is incredible.